Hey everybody, it's Norris with the Norris Group. It is December 2nd, it's Friday, episode 331, and did you know you could get your website taken down if you use the term "we buy houses" in your advertising? That and much more as we cover the biggest headlines in real estate. We are winding down I Survive Real Estate. It's still playing on the radio show. You can always see the entire video on isurviverealestate.com. But on the radio show this week, it's the entire panel, my favorite part of the event. At the very end, the entire panel is talking everything from stagflation, millennials, and immigration, and of course, much more. Adam Data Solutions released their latest home equity and underwater report that shows a decrease in seriously underwater homes. Home prices in the U.S. increased 5.5% in September to new highs. The National Association of Realtors reported pending home sales increased by just 0.1%. The latest report from Adam Data Solutions showed a 16% increase in home refinance originations in the third quarter. And it's probably because this next little headline, because mortgage rates increased with 30-year rates now at 4.08% and 15-year rates at 3.34%. Oh, remember back in the days when that started with the 2? The amount of money a Chinese investor is allowed to convert every year is $50,000. Chinese banks have been told to tighten up loopholes, making it harder for Chinese investors to take money out of China. And under the current political environment, we really don't know if that's going to get better or worse, but the Chinese yuan has continued to go down, especially in light of a Trump presidency. Add to that foreign banks are actually tightening down what they're willing to lend foreign investors, and it's sort of an ugly mix. So if you are in the multi-million-dollar flip market thinking that Chinese investors are going to be able to suck that up, be very careful and pay attention to changes in the market. Some economists, including the chief economist of Freddie Mac, are making some dire predictions on coastal real estate, saying that rising sea waters could eventually devastate coastal communities, causing a massive real estate bubble in those markets, and they would never recover because, of course, they would be underwater. Florida has 6 out of the 10 urban centers most vulnerable to storm surge, and 40% of America is actually, they live and work in coastal areas. Before we get to that point, rising flood insurance could gradually erode values anyway, as that becomes more apparent that could be an issue. So not all states are required to even disclose on flood zones and past damage, which is really interesting. And actually in the newsletter we'll link in the blog, Adam Data actually had a tool that overlaid maps of risk of hurricanes, wildfires, and natural disasters. And they got so much negative feedback from the real estate community they had to take it down. I don't think that bodes very well for the reputation of our industry. So for a lot of investors that are going out of state, be very careful and make sure that those kind of disclosures are being made. And if they're not, make sure you're doing research on your own. The Federal Reserve reported continued economic expansion in most of the country in October and November. Non-farm payroll added 178,000 jobs, which beat expectation. And the unemployment rate also beat expectation, is down to 4.6%. So a lot of other people like to look at the underemployment rate as more realistic of what's going on, but that decreased from 9.5 to 9.3%. However, the number of labor force not in the mix increased by 450,000. So now we have over 95 million people not in the labor force. Trump and taxes. Very few details have been released, but we know some things, like he wants to move from 7 tax brackets down to 3. He's got his eye on Dodd-Frank as well as Obamacare. So maybe for real estate investors, that could mean that 3.8% tax, Obamacare tax, could actually go away. Home interest tax deduction, however, is on the chopping block. Steve Mnuchin, Trump's new pick for head of the Treasury Department, was on the news this week saying that it is very much on the chopping block. They might allow for a little bit of deductibility, but it will be capped. Okay, if you listen to the radio show I did this year with Michael Quarles, we talked briefly about the We Buy Houses brand, and not to use that in your marketing because it's trademarked by X5 Ventures LLC, or the WeBuyHouses.com brand. Yes, that very, very generic term, We Buy Houses, is actually trademarked, and they spend a ton of money, as have their franchisees, in making sure that it stays that way. Allegedly, X5 only has a trademark on printed and educational materials, but it's not unusual for them to go after digital assets. So for those of us that are fighting online for search engine optimization, We Buy Houses is the most widely searched term when people are searching to sell their house quickly, like by far, according to sites like oncarrot.com. So a real estate investor out of Virginia got his stuff shut down, like YouTube. His name is Brad Chandler. I don't know him personally, but he started a GoFundMe page to pay for an attorney specializing in trademarks, and he's going to go after them and try to get that trademark reversed, saying that We Buy Houses is just a little bit too generic and best describes what we do as real estate investors. So will it work? I don't know. I'm posting the link to the GoFundMe page on our blog, so you can check it out, because he actually posts when YouTube YouTube shuts them down. And we're talking about everything from websites to YouTube, Facebook. They say, you know, you're violating this trademark and you have to take everything down. What do you think? As we buy houses, trademarkable? Should it be trademarkable, or do you think it should be reversed? If you're on YouTube, please leave a comment below and don't forget to like the video and subscribe to the channel so you don't miss a beat. If you're on Facebook, please don't forget to not only like the Norris Group page, but don't forget to add us to your See First list and with notifications on. Leave your comments below the video, and if we miss something, share the story on our comment sections on either YouTube or Facebook, and we'll make sure to include it on our blog at thenorrisgroup.com/blog. We've got some upcoming events. We're going to be back on the speaking circuit launching an all-new talk, 10 life-changing days of a real estate investor. We'll start off at SDCIA at one of the biggest parties of the year. It's out in San Diego, and they typically have over 400 to 500 people there. So hopefully we'll see you there. It's December 13th. And then, of course, February 4th, you probably got an email from me if you're on our email list. We're doing 2% mortgage rates, 30 trillion in debt, and other surprise endings. That is going to be an 8-look forecast into the future for real estate investors on what's coming up and things that we have to watch out for. For more information on hard money loans, including fix and flip, buy and hold, and new construction, please check out thenorrisgroup.com. We've got rates starting at just 6.9%, and that's amazing. If you want more information on trust deed investing with trust deeds, check out tngtrustdeeds.com. With that, have a fantastic weekend, and we'll see you next week.